What's up, people? Welcome to episode 23 of the Hood podcast/webcast, because I don't know how you're consuming this content. I'm your host as usual. This is Jimmy. I got my brother Corey to building. Corey, what's going on?
What's going on, Jim? How you feeling?
Man, I can't complain. Ain't nobody listening. Fair and partly cloudy. But with that being said, listen, man, everybody out there support. Just want to always say thank you, man. I want to say that every episode because we definitely appreciate all the support, all the shares, all the likes, everything, man. But keep doing that because we want to make sure we get this content out there, all positive messages from people within our community who are investors, doing amazing things, community activists, building businesses. We just want to show these stories. So we got another amazing episode lined up for you today, man. This is special for me, man, because this is my brother right here who literally was a badass kid on my block on when I was coming up. So this is like a family friend, but I got to watch him grow, man. And his story is amazing because I see him from time to time, and he's talking about trading, investing, and he's built himself a nice portfolio. So I told him, I said, man, I want to get you on. And being a humble brother he is, he's like, man, I said, listen, you have a story because you kept your job, but you also became an amazing investor, which is interesting because we talk a lot about the book, The Cash Flow Quadrant, on this show. And one of the things that Corey and I always talk about, listen, doesn't matter what part of the quadrant you're in, everybody should be operating in the I or try to get to the I at least. So I think this is an amazing story so you can tell people how you do it. But without further ado, man, I want to be my brother like Shawn Witherspoon. I call him Spoon or Shawn, however you want to be called. We'll call you that. But I call you Spoon for lack of a better term because I know that's your IG handle or whatever. Spoon, what's good, man?
Not much. How you making out, Jim?
Man, listen, I can't complain, man.
Corey, what's up?
What's going on?
Hey, listen, man. Before we get started, man, and talking about your journey as an investor, for the people that don't know you, like I said, you grew up on my block. But tell people what part of the city you from, what high school did you go to, education background, a little bit about that.
I grew up in the Germantown area. From the ages of, I would say, 1 through 16, as you said, we used to live right down the street from each other. I then moved up into the West Oak Lane area, and I currently reside in Mount Airy. As far as schooling, I went to Germantown High School. I went to Martin Luther King High School. I went to all my local neighborhood schools, Emlyn Elementary and Roosevelt Middle School. After school, I went into the medical field for a while.
Okay.
So that's where I got my career.
No doubt. So with that being said, what was the first thing that turned you on to, for the people that don't know, you're a real estate investor. You buy residential properties, but you also are a trader and you buy dividend stocks. So you're hitting it from multiple angles, Pauls. But the thing is, what got you into investing in the first place? What was the first thing that piqued your interest? And you said, I got to start looking into this real estate. Was it real estate first before the stocks, or how'd that all work out?
What really got me into it, even before investing, I had to come up with some type of self-discipline as far as financial education. And what really brought me to that, my father was killed when I was 19. We didn't have the money to bury him. So at that point, I knew financially something was wrong with me and my immediate family. So as far as my investing, I got my 9-to-5. I pumped that out. Then from my 9-to-5, they told me my retirement age was 62 and a half. And I just thought that was crazy to collect at 62 and a half. I was thinking in my head, I would have one foot in the grave by then. So at that point, I started seeking out knowledge about the stock market. And I started buying dividend stocks early on. Then I moved on to rental properties, residential.
Mm-hmm.
And I was spoiled in both ways of seeking out both information. And I think I came on at a good timing. So the market wasn't as challenging back then. So I was a little spoiled with that.
Okay.
Far as my stock portfolio, like I said, at a young age, I'm about to say around 22, 23, I was just buying stock. Dividend stocks, I really wasn't into the fundamentals. I really wasn't in to trading anything at that time. I was just collecting stocks at those times. Then cheat code to life is find a mentor. So I went out and I found the mentor, and I wound up going to a meetup to find this mentor. And I just knew he was smarter than mostly everybody in the room. So I wound up pulling him to the side. We talked for a good while, and he gave me a book to read. The book was called Options Made Easy, and that opened up the door to my options trading. I mean, the book was a dry read, really dry. It was like watching the paint dry. But I got through the book, and that started my option career. As far as anything in the option field, I do all types of trades for as options. Okay. And if you want to get more into that, I'll break those down. As far as the real estate game, I was making enough money in the options. I felt as though I needed to move into the real estate game. And once I got into the real estate game, I wanted to focus on single family units. I knew from my 9 to 5, I didn't have much time to dedicate to the real estate game like I wanted to. So I was spoiled with my first one. Like I said, I wound up getting a lipstick job. Okay. What that mean? Basically, I bought a property about 5 years ago for about $40,000. The property only needed painting, some light cosmetic stuff, and I was all in with that. Wound up cashing out, created a nice cash flow from that property, and I moved over to my next property. Got that property done. Once that property was done, I wanted to move to a bigger project. And from there, I knew the property game was not for me. Not to say it wasn't for me, but I knew I bit too much off at that time.
You listen, though, what you're saying, though, is key, right? Because self-awareness is very important in business in general. Like, regardless of we talking real estate, stocks, management, whatever it may be, is self-awareness is key. So, real estate, I don't want to say it's a fad because it's not a fad because, I've been in the game for a long time, but just being on social media, everybody wants to be in real estate now, right? It's kind of crazy. Because I remember back in the day feeling like I was alone, but now everybody seems to want to be. But what I tell people all the time is be self-aware. Everybody is not meant to be a landlord.
Lord, yes.
Everybody's not meant to be a landlord because it's a tough business. It is a tough business. You told me something last time I saw you that was like interesting, and I want you to share this story. You were telling me about one of your tenants who actually pays on time.
Yes.
But they call you so much that you were talking about not renewing their lease, although they're good at paying, but it wasn't worth it. Like, and I know Corey can speak to this because it gets into the whole aspect of your time and what's your time worth.
Yes. So like I said, I still pump my 9 to 5 out. I love my 9 to 5. That's what I do to the max. So I use that. My 9 to 5 covers a lot of mistakes that I have made through the real estate game. I made the most common mistakes with contractors, paying them half up front, things of that nature. I made every mistake you could possibly make. But even with my small portfolio, I still want the most perfect tenants. So this one particular tenant, she pays on time. She calls too much, though. Most recently, when I seen you, I got a letter from the city saying outside of the property was dirty, was infested with weed. So I wound up doing a drive-by, and sure enough, it was infested with weed. So I reached out to her. Of course, she didn't answer. So I wound up going through there, and I did it myself. It's not how I like to spend my Sundays, but I spent my Sunday out there cleaning up the weeds. So with that being said, I just know my passion is not there, but it is real estate to me is a great vehicle to create cash flow, and it's a great vehicle to invest in. But you have to know yourself. I know that portion is not for me. I know doing like total rehabs is not for me. I'm more of a lipstick guy. I just want to go and do my regular cosmetic stuff and go ahead and move out. That's just for me. So I know my discipline. I'm not disciplined enough to be there every single day to look over a general contractor's shoulder, things of that nature. So I know my limits when it comes to that.
Man, that's very important. Like knowing yourself, right?
Yes. Yeah, that's heavy because a lot of people, they think they're ready for the business and not ready for what's coming at them. And so knowing where to stop, you know what your time is worth. Like I don't want to spend my time like that. And so the money, no matter what kind of ROI you're getting on there, is not even worth it. So that's big.
Yes.
To know yourself in that way.
Yeah, that's a good gem right there because you have to be self-aware. Like, but the way you find out about being self-aware, which is another great point, is by getting out and doing something, right?
Yes, you have to do it. You have to learn. You have to actually know and get the phone calls. You actually have to be in the properties to know and tolerate it and know, like, yo, is this for me or is this not for me? Another little key, I know you like the idea that I did once before, the credit card play. I learned that from another mentor.
Mm-hmm.
My credit was always built up good credit. And I used to get the credit vouchers in the mail. One of my mentors put me on this. And they used to be like, oh, we'll advance cash you $10,000, $20,000, interest free for a year. So I didn't necessarily have the capital. I didn't want to move the capital. I don't believe in selling many of my stocks. So I didn't want to move the capital out of my stock portfolio. So I wound up doing a cash advance, purchased the property. And once I acquired the property, I funded the money through my regular 9-to-5 to rehab the property, got the rehab done, and did a cash out refi. Once I got the check for the cash out refi, I paid the credit card off immediately. And basically I kept about $5,000 and I just recycled it back into my dividend portfolio. But that play, I always try to tell everybody, that play, you have to be disciplined because you can easily acquire this credit card and that year expire or something go wrong, you can wind up paying this credit card 17%, 20% back. So you have to be disciplined financially to do some of these things or else you'll just be wasting your time.
Yeah, because then the ROI from the house would be going back to the credit card.
100%.
So it don't make no sense.
It does not. It wouldn't make sense. So you really have to be disciplined when you're doing some of these plays and you getting fancy with the financials, I would say.
Yeah, because you end up working for the bank, so as Corey calls them, the COBOL. You end up giving all your money to the COBOL.
Absolutely.
That's interesting, man. So the credit card play, like creative financing. So you're using creative financing, but when you get into these different fields, right? And you say that you learn that the real estate game isn't for you at a certain level. You still will do a cosmetic thing, but you don't want to do any like deep construction, which I understand. Because I remember getting in a commercial and like being lost and I'll never do it again. But the great thing about real estate is you can be involved in real estate from so many different ways, right? Whether you want to invest in, building up a REIT portfolio, whether you want to, fix and flip, wholesale, whatever it may be. But like I said, again, another key, the way to find out is by getting out there and doing things. So I have another investor that I was speaking to, and this gentleman owned over 100 some odd properties and realized he hated the landlord game, right? He would start selling off his properties and went back into wholesaling, even though wholesaling is how he started in order to build up his portfolio. But once he built up his portfolio, what he realized is he liked wholesaling,
Yes.
But so to each his own, like wholesaling is a tough business, but he realized, and he told me, he says, listen, if I'm cash flowing 500 on a door per month, that's considered like a good cash flowing property in Philadelphia, in our market, based upon what the property's worth or whatever. He said, so he started doing the math. He said, so that's about $6,000 a year. He said, I'm making on average $12,000 on each wholesale deal. So I'm getting 2 years of income right up front.
Absolutely.
You know what I mean? So he broke it down that way. And I was like, okay, yeah, to each his own, but it's something about the passive income that I like. But my point in saying all that was you have to get out there and try things to figure out what your niche is. So
you got to know yourself.
Yeah, you got to know yourself. So you also do the trading and the dividend. So what would you say is your favorite thing out of that trifecta, which is how you're building your wealth? Out of that trifecta, what's your thing? What is your thing that you like the most?
I really like the markets most, and the markets still gives me access to properties, as you said. Like I do own some REITs, things of that nature. And just to put the disclaimer out there, I'm not a licensed broker, so anybody listening, not go out and take any trades or buy any stocks off of my advice. Do your own research. But I love seeing them dividend checks, Jim. And at a young age, I understood the value and I learned the value of that compound interest. I understood the value of companies raising their dividends and growing their dividends. And, the to build that dividend portfolio, not only you need the capital, but you need the time. A lot of times you need time on your side. So I would tell anybody, start as early as you can. And if you want to be a dividend investor. Far as the option field, I love options. I love everything about options. I do all types of options trades. I'm not really a day trader. I wouldn't call myself a day trader. I would fit more into like a swing trader category. Most of my trades are 20, 30 days out. Some of my trades are even longer, 60 days out, 70 days out. And I roll a lot of my positions over and over again. And I do sell options against my stock that I own also.
Yeah. Which is called
cover calls.
Cover calls. Basically, you just printing money.
Yeah. I'll do some cover calls to bring in a percentage, to up my percentages and my returns on top of my dividend. So I know if a company is paying me a 6% yield, I know I can match that 6% yield by doing cover calls throughout the whole year on that company.
Yeah, I gotta get and I'm actually studying with brother Jay Johnson right now, who was on the previous episode. So I got with him and I'm studying. So I've ran options in the past, but it was basically like Corey, like, yo, run this, and I did it just to make some bread. Yeah. But I decided to take a little step further, so studying with brother Jay Johnson, and it was one of the things I know Corey was telling me about that before. So I have like certain positions where I own, couple hundred shares in like different positions, right? But I guess one of the things I did is I have multiple brokerage accounts. So the companies that I hold like my long-term stuff in is not the same TD account. And again, that's not advice either. I was like, trying to run the options out of. I was like, maybe I need to move some stuff over here so I can start the cover call game, because that's next level. Like,
listen, you are printing money. If you running cover calls, you basically printing money.
Yes.
Because you can't lose.
But and for the novice out there, right? So I'm learning a lot studying with Jay and just from talking to people. One of the things you just said something interesting, because talking to people that have been doing this for years, and I've met some successful options traders. And one of the things I find interesting is a lot of options traders that are successful don't trade a lot of, and I was telling Corey this the other day, they don't trade a lot of companies or a lot of sectors. Like, I've met people who only trade FANG, like that's all they do, or they're only only trade Microsoft, or they'll only trade the energy sector. So I found that to be interesting because coming in, I'm like, well, if you trade and you're looking at everything, but it doesn't even work that way.
Nah, you what you want to do is find patterns, and you want to identify companies and find patterns. And so if you can identify companies and find patterns, you can always make money. So options traders tend to stick to what they know.
Yes. So if you know a company and you know how a company move, and you know their price actions throughout the day, the week, things of that nature, you could pretty much trade options with that knowledge. But I will tell everybody, that options may not be for everybody either. I have blown up accounts before trading wildly. Like I said, I still pump my 9 to 5. So a lot of my trades are defined risk trades, meaning I'm not just going out selling calls or buying puts or buying calls, anything like that. I do a lot of spreads. I do a lot of pretty much spreads are my bread and butter.
Tell people what spreads are.
All right, spreads. One of my favorite spreads is called the in and out spread. So you got just A, B, C, D stock. And let's say the stock price is at 100, Jim. I do an in and out spread. If I believe the stock is going to go up, I'll buy the 101 call and buy the 99 call. That right there gives me a 58% probability, depending on which way I believe the stock is going to go. But far as I always look at my risk first. So my risk doing that type of spread, I'm risking $1 to make $1. So I'm not over risking my finances. So it's not like I'm going to wake up tomorrow morning and be $5,000 in debt or anything like that. I'm basically risking $100 to make $100. But to even more to sway the probability in my favor, I don't look to make the whole $100. I only look to make 55% of that trade, then I get out. So I'm making 55% on that $100. So that helps basically put the odds in my favor with that type of spread. I I've been in scenarios where as though my broker is calling me the next morning, letting me know I owed them bread. Basically, I owed them $5,000 because one of my positions wound up getting downgraded or whatever, and pretty much I worked it out with the broker, got out of that position. But that in itself taught me that I was over allocating my funds. So when I'm over allocating funds, you should never over allocate your funds when you're trading options. You know, you should always think risk first, reward second. So always think about your risk first, think about your reward second.
Yep.
As far as my sectors, I don't have.
Hold up, couldn't imagine getting that phone call, cause that phone call is crazy.
Yeah. It was a crazy phone call, but they work with you though. They know know what it is, and they know, so they do work with you. Most good brokers work with you. I've been with quite a few brokers, and pretty much a lot of my stuff, I believe liquidity is king when I'm trading my options. Like it has to be a liquid product. It has to be penny increments as far as the bid and ask, and nothing crazy. Like let me give you a Beyond Meat would be the bid and offer probably be about $2-3 because
that's way too much.
Too much because I know it's hard to borrow, so I really don't touch it.
Yeah.
So I like the apples where I'm getting in the SPY.
Yeah, where the bid ask price is 2 or 3 cents instead of $2 or $3.
Yes. So I don't really like to touch things because you're already in a losing position. So you're already paying $2 or $3 to the broker to even fill that position.
Yep.
So I really don't touch a lot of that type of stuff.
So how did you and I guess it's through trial and error, get to the point where you have your own system?
Like you said, through trial and error, learning different strategies and sticking to the strategies that you love and that you learn. So I don't try to go out and learn. Like I know about iron condors, I know about butterflies, back ratio spreads and wrist twist spreads, but that's not what I'm really interested in. I stick to the trades that I love and I know. So I know exactly what I'm getting myself into. That's my market. It's just like I relate it to same thing like residential properties. I'm not going to go out and buy this big commercial property. I don't know nothing about that. So same thing applies for my trading.
And that's what I'm finding interesting within like the whole options game is that how specific. Like I met someone because I'm online talking all day because I'm studying. Like I said, I'm studying, and I met someone who was they only do calls, don't do puts at all, and then vice versa. Someone who only like works with puts. Like people really like specialize within this specialty. What I mean? It's kind of crazy
they
how
stick to what they know.
Yeah. It's kind of interesting. It's kind of interesting.
I do both. I'll hold some long-term put positions, and I'll just keep on rolling the position out. And
listen, my positions, I trade events and I trade a couple companies. Like if I see an event happening, and I know which way the stock is going to move, then I'll trade events. Like when I know the stock market going to be down for that day, I'll trade gold. You know what I mean? So because I know that the gold position is going, is going to grow or something like that. So I trade events, and I also trade, a couple companies, Microsoft, Visa, Roku. Roku's my baby because I've been watching them since they got onto the market. So I trade a few positions, and then I trade some events. So like that's the kind of trading I do. You know what I mean? So I do calls or puts on whatever event. If I can see it coming, and I know exactly what's going to happen with it. And then with certain companies, I know their price range, and so I can trade them all day.
Yeah. So I'm big on like the Greeks and the options. I believe the Greeks are like the foundation of option contracts. You should know your thetas, your deltas, your gammas, things of that nature. So exactly if I'm long 100 deltas, it means I'm long 100 shares of that particular position. Mm-hmm. So I like to be short a lot of theta.
Now, a couple questions. Based upon that, we have had a couple people on the show previously that trade options, and they always talk about the fundamentals versus technical. Trying to figure out where you stand on that, and also if someone's just starting today and they want to learn more about trading, what would the first thing you suggest them to do or read or something like that?
If you're going to, I would say start as far as option trading. I would definitely pick up the Options Made Easy book. You know, it helps understand.
although you just told us it's like watching
It's
paint
a horrible
dry.
read, a horrible read. But to me, if you don't have somebody over your back teaching you, you need to understand what an option contract is. You need to understand exactly how it works. You know, it's just not something like you own it. So you don't own this particular, you know, it's going to expire eventually. So you should know exactly how these things work. So I would definitely say that. There's another book called Trading in the Zone. I soak that up through like a audio book. So I listen to that maybe 3-4 times a year. It helps get my mindset right. You know, when I need to restart my battery, I always listen to that. Another thing I believe you should do, always trade small when you're beginning. You should only be putting like 1% of your account in each trade. So you're not blowing up your account. The more you trade off, then you'll get used to trading. You'll get used to seeing how the market moves. So definitely trade small. I found a lot of traders that I know, they wind up going out buying 10 contracts or something, or selling 10 contracts or something, and they got a $5,000 or $10,000 account, and they over allocating themselves. You know, one bad day or one bad move can, you know, blow up that type of account. So
well, my thing is with those type of accounts, because I know a lot of people who trade from small accounts, and so what you do is you use stops, and so those take the emotion out of it. If you use the stops on both ends, those take the emotion out of it. And so
I got another story for you, Corey. I was actually trading Netflix maybe about 3 years ago, I believe. And I was trading the earnings. I was long calls. And I wound up not using stops I had stops for 5 contracts. I didn't have stops for the other 5 contracts. They missed earnings by a lot. I mean, I think it was like a 3 standard deviation move in the underlying. And it blew right through my stop. So I wound up just taking a big loss on it. So sometimes it
all depends on what kind of stop you put on it, though. Because if you put a price stop on it,
it's a market stop. I mostly use market stops. You know, I rarely ever use a price stop. So I got out, of course, but at the market level. So I took a big loss on it. So that's why a lot of times I stick to the spreads and stick to spread trading, because I'm working my 9 to 5. I'm not watching the markets every day, all day. I know exactly what I get alerts when I get filled on positions. I get alerts when my delta is too long or the delta is too short in one of my positions. So it's like basically I have automated a lot of my trading as far as the options markets. And like I said, it's all different types of traders out here. Like Corey said, it's only some people that buy calls, some people that only do puts. You have to do or stick to what you know. You know.
So that was asked. I was going to actually ask you that as my next question in terms of maintaining your gig while doing this. How have you like come up with a system that allows you to do both? But you kind of answered that. You've automated a lot of things, but I think that's important people to know that you can actually, if you take the time and get the knowledge, you can automate a system where you can kind of do both.
Yes.
You know, you use your gig as your first investor. You know what I mean? Like, look at them as giving you your seed capital. That's interesting though, man. So the options you would say is your favorite part. You said dividends is your favorite part, but the options
I like
is how
seeing
you
those
build
free
up capital.
checks. No dividends. Love it. Love it. So a lot of my capital, even with my my property capital, I roll that over into my dividend stocks. I don't touch it. Most of that money is just rolled over into dividend stocks. I'm buying more dividend stocks. Ultimately, you know, I want to retire just on dividend stocks and just be done with it, done with the whole game. Get those free checks.
And that's people know I'm a huge proponent of that. I've been preaching that for years. Like, yo, don't take profits, take it and put it into equity ownership, ownership in companies, man, ownership,
straight into the drip.
Yeah, absolutely. Because with people in real estate in general, even if you're a person that flips, take a piece of that bread and put it into those and buy some companies, like buy companies. But Man, you gave us a lot of game in terms of the options. Like I got stuff I got to look up now too. I got to learn my Greeks for one. And I got to get that audio book.
Yeah. Trading in the Zone. I think that was a key book for me, at least.
So what's your future? What do you see as something that is anything you want to get into? You're gonna keep running this system until you're ready to like, go move to an island or something?
Pretty much I want to travel after I retire. I'm looking to try to retire, of course, at a young age. I would say about 50.
Mm-hmm.
Pretty much I'm just growing my dividend. Right now, I'm just focused on growing my dividend portfolio. I'll still walk away with my pension and everything else, so that ultimately will help with the end game, but I'll still trade also.
Mm-hmm.
But ultimately, everything is going to be rolled into these dividends.
Man, that's dope. Corey, you got any questions, man?
No, he answered all the questions because, he basically said, he getting out of here at 50, because I was going to ask him, you retiring, but, what's that age? What's that number? But my thing is, for most people, I don't believe in age as a retirement tool. I always look at the number. But, but as a person who has a 9-to-5, age has to play into your retirement number. So
I think it's important just to have something like, and I get your point too, like have a number, but sometimes you don't know what I get both sides of it. I think is you got to have something, right? So either it has to be one or the other. You have to have something to point to. Some people are afraid to put either one out there, and you see them in Walmart at 85 years old greeting people.
Nah, that ain't the lifestyle for me. Hopefully,
You know what I mean? You know what I mean?
Absolutely. Like you like that number as far as monthly wise and creating that passive income monthly, I would probably, the way on a smaller scale, I would like to passively income about $15,000 a month.
Mm-hmm.
That's including my pension, the rental portfolio, and of course my dividend portfolio. So, $15,000, that I'll be fine. And it's not like I live a real lavish lifestyle.
I was about to say, dog, I don't even need 15. Like I'm a cheap bastard, dog.
That number.
I'm very conservative.
Like, the thing is, like, I guess once you cover your housing expenses, like if you have a house that's either paid off or you can cut, like I'm a cheap bastard, man. So I don't need 15 racks a month, like, but at the end of the day though, you got to figure out what that is.
That pension cover a lot of that. That 9-to-5. I know a lot of people think they got to leave a 9-to-5 or can't do a 9-to-5, but that 9-to-5 covers a lot of ground sometimes.
No, absolutely.
No. The reason why we had you on the show is because your 9-to-5 has covered up your mistakes, and we always tell people, like, people be trying to leave a 9-to-5, which is cool, you know what I mean? Because trading your time for money is always hard. Yes. But my thing is, if you gotta trade your time for money, you need to do it right, because you in the I quadrant, you always winning. You know what I mean? So you're not just working, you're not just trading time for money, you also an investor. So if you're going to do it right.
Listen, I heard a brother I was talking to the other day. And for people out there like, yo, you always talking to somebody. Listen, I have financial conversations pretty much all day long. Because that's all we talk about. Like we won't talk about nothing else. You know what I'm saying? But anyway, and he made a point to me, which was interesting. I never thought about this. He had a business where he was making like $2,000 a month while he had a full-time job, right? Yeah. So his family said, listen, man, if you could do that part-time, then you can, go full-time and cover up for your job, yada, yada, yada. But to make a long story short, he said the one thing he didn't think about as after he quit was the things that you have to pay for when you're running your own shop as an entrepreneur. He was like, it was small stuff such as toilet tissue, pencils, paper, the extra electric that you're going to like. It's just certain things he didn't think about that, his job was covering up as he was doing it as a part-time hustle. Yeah, it's just a difference of having a part-time hustle versus doing something full-time, right? But you have to, again, this all comes back to self-awareness. Self-awareness is key. Some people can't deal with the confines of a job, but if you have a job that you actually like or love, which is why I always focus on that book, man. Cash Flow Quadrant changed my whole outlook on that, because I grew up in, hearing people, you gotta have your own, you gotta do this, you gotta do that, the third, and I read that book and I was like, it's more about strategy. It's more about strategy. Yeah. You know what I mean? Like some people's thing is, I get a part-time job and I'll do this. Some people's thing is I don't have no job, or some people's is, I'll start a business. Everybody's journey is different. But to me, I think the thing you focus on is doing something. Don't be sitting around always talking about what you're about to do.
Yeah.
Get out and do something, right? So even with you, and you're part of the story where you talked about realizing that big construction is not for you. You don't know that until you try it.
Yes, you don't. So obviously you got to try it. It's either you got to sink or swim. So you got to jump in the pool and try it. I tried it. My 9 to 5, of course, covered up for a lot of mistakes I made in that field.
Yeah,
so.
I think we found out the title, Corey. 9 to 5, cover my mistakes.
Yeah,
because but that's a good point though, and I think that's why your story is inspiring, because you're an investor. You're working in the I quadrant while you're working your gig, and you're building, and you've kind of created your own system in the options game, which is dope. Because I learned a lot just through having this conversation right here. About working with the spread and actually trying to figure out what's your strategy, right?
Yeah.
You figured out what works for you. And I guess for me,
what works for you.
Exactly. Because like I said, I've traded options, I've made money, but I don't think I've figured out what my thing is yet. And now I know that's something I got to think about as I'm studying. You know what I mean?
Yeah. So
yeah, man. Yeah.
You own all them shares. Get to doing the cover calls.
Yeah. Corey put me down with it. I was like, I could do that. You know what I mean? But
yeah,
that's dope.
That play is vital, and that's a good play.
That's crazy, man. So when you think about how that works, and you think about people that have been hip to that game, that own millions and millions of shares, they probably just print money.
Yep. So
man, ain't it beautiful? It's amazing how many ways there is to make money out here, man.
Yo, it's crazy.
I know. I had another play. A few. I know how you always like to ask Jim. What did I feel like real life meant the markets. So a couple months ago, my kids, they love Netflix. So my middle one, he loves the Luke Cage show. So Disney wound up pulling all their content off their Marvel content off of Netflix. So I was like, interesting. So I started going in trying to read their 10Ks and read the news on them. Then we got a letter in the mail stating that ESPN and all the Disney channels was going to be suspended because Disney was trying to work out a contract with Comcast. So I'm like, all right. So I knew about that. So learning those two things, I'm like, Disney's about to announce their Disney Plus platform because they pulling all their content. They redoing the contracts. They just upped the price of the amusement park. So for a good while, I was just buying Disney shares. And I knew they was going to announce their Disney Plus. So I didn't know how the announcement was going to really take place or really affect it, because sometimes the announcements, they can have an announcement and the stock can go down, of course, if the announcement's not too good. So I wound up just buying a whole bunch of Disney stock. And I knew I just couldn't go wrong with it, because at the end of the day, I can either do cover calls and I will still get paid the dividend. And it's just a company I will hold forever. But I wound up jumping probably about 30 points going up. So I made a good profit on it, but that's just a prime example of just looking at real life examples, and it controls the market. Everything is in the markets.
Yeah, trading an event. You traded the events because you had the information. And that's the exact same. That's the way I trade my options. I trade the events. Once I had the information, I just trade the event.
Yeah. So, we just got to be aware of that as a community. I know, like we always say, we make things cool, and like Nike, we should be investing in those type of companies, all types of stuff,
Yeah, man.
Real life events, you could trade into these markets and buy these companies. We just got to be more self-aware.
That's absolutely true. It's like my favorite movie ever, which is Trading Places.
Yeah.
When you just reading the paper and you make decisions, although they was trying to cheat and get that crop report. But the gist of it is though, we spend a lot of time on social media, Twitter, or whatever, and we see all these events and people are making money as all this goes on. Like when you start to understand how money is being made every day, it's really crazy. Like I just said, there's so many ways to make money out here, and it's just a matter of having the knowledge, man. Which is one of the reasons why we have this platform. People to find people they can reach out to, or see that people are out there actually doing it. Trading events is key. some people, that's all they do. They don't even do any sort of they don't even do any sort of technical analysis. They use the, this trade events, or they use both. Like they use technical analysis within trading events. What do you? That's another question I'm going to go back to: fundamental versus technical. What do you think that you use more of? How deep do you go in in terms of technical analysis?
As far as technical analysis, I use that a lot. I mean, a whole lot when it comes to trading my options. I had different indicators and things of that nature. I look at the standard deviations. On most platforms, big platforms, they tell you the price action, and they also on the options chain will tell you the expected move of the options for the option chain. So, you can have a three weeks out for an option chain. I know at least in Thinkorswim, it'll tell you the expected move. So I measure that along with some of my technical analysis to sway which way I'm going to trade or make a trade. As far as fundamentals, I use that far as I read a lot of 10Ks, and I use the cheat code. I use Siri to read me a lot of 10.
Yo, why not use technology?
I'm telling you, man, because I'll drive in the morning and morning time on my way to work, I don't listen to no music. I don't listen to no talk shows, nothing. Once in a blue, I throw on your podcast, but mostly I'm listening to either some stock information, some stock news, or I got Siri reading me some type of 10K or some type of earnings reports.
Oh, so that's the cheat code. You can actually have Siri read you a 10K.
Yeah, so I just have her read me because it's boring. It's a boring read, but as far as the fundamentals of a company, if you're going to buy and hold that company forever, and I don't plan on really selling a lot of my companies. I hold on to a lot of my companies forever. I plan on, and I plan on passing that stock down to my kids. But with that information, I just use I read into a lot of the fundamentals of a company. They PE, they earnings, their payout ratios, how they grow in their dividends, all of that. I read their competitors, if another big company, if it's coming into their market, so the fundamentals, I use that far as me buying options, but my technical analysis, I use that more so when I'm trading options.
All right, that's dope. That's dope. And you mentioned your kids, so I'm pretty sure that you've probably started to set them up in terms of
Jim, you gave me a key to life with that one, man. I remember you had the event on Washington Lane, and you pulled out that Stockpile gift card, man. I was like, yo, this is groundbreaking for me because I was always looking the way to get my kids interested into the markets,
Mm-hmm.
And on Stockpile, it's another brokerage company, as you know. You can buy gift cards, everything. But more so, Stockpile is user friendly, and it shows you the brand instead of the ticker symbol. So I was able to show my kids what Call of Duty or what Nintendo look like or what YouTube comes up as. Then they can see what the company is. But from that right there, I have my kids love it. So that right there was like a real key for me.
Yeah, man.
Yeah. Stockpile is amazing. Can I always say that it's perfect for kids because of that. Because the one thing kids know brands.
Brands, yes.
Yeah.
You can see a brand from a mile away.
You know what I mean? Like you look up instead of like Sony stock, it'll show like the PlayStation logo, right?
Yep.
You know what I mean? It'll show like the Xbox logo instead of the Microsoft logo.
Yes.
Yeah. So
I'm glad somebody got something out of one of our events.
Yo, every time
man,
I come to your events, I learn a lot, Corey, and I implement it to a lot of my stuff every time.
I appreciate that, man. And likewise, anytime we talk to you, we learn something, man. But that's what it's about. That's why it's about building, man, and that's why it's about having these conversations. Because like I said, I learn from people like pretty much every day. I learn something. As much information as I put out, I learn just as much.
Yeah, you got to become a sponge.
Yeah, you got to share information, man, and we got to start having these conversations in our community, man. Because like you said, we literally move markets.
Yes, we do.
And it's so much money out there being made in all kinds of different ways.
Consumers. And
it's so much money. Yeah.
We need to understand the power of ownership in a lot of these big companies. We need to start owning portions of these companies.
Man, and you laid it out, man. This episode right here, you gave us a lot of game. You talked about, being disciplined in terms of debt, how to utilize debt, how to figure out what works for you, but also be an owner, always be an owner, but don't feel as though you have to do what everybody else does, right?
Yeah.
So because you see somebody who has like, $1 million in blue chip stock, doesn't mean that's for you.
Yeah.
Because you see somebody with 50 rental properties or 200 rental properties, it may not be for you. Commercial may not be for you, but something you have to figure out what your thing is.
Yes.
Ownership is for everybody.
And move on it. Every one of our guests, the thing that ties the thread for every guest we have on the show is that they make moves. Nobody is half stepping. Everybody is full speed ahead on whatever it is they doing. And so that's the common thread between every guest we had on here. Like every guest is 1,000 miles an hour at whatever they doing.
No, that's a great point. Taking action. And also one of the things another common thread between our guest core is not afraid to make mistakes. It's not one person that came up here and said, everything was perfect. Everybody talked about one or two, a couple mistakes that they made, including you, Spoon. So I appreciate you being honest about that, man, because, it's not about being perfect, you know what I mean? But it's about taking action.
Yeah. So I made a ton of mistakes throughout this whole investment thing, and I'm pretty sure I'm going to make a lot more, You just got to keep on pushing through your mistakes and keep on going, blowing up accounts and everything like that.
No, don't blow up your accounts, man. Don't be encouraging people. Don't be encouraging people to do that, man.
I hate for anybody to get that phone call, but it happens, man. I'm telling you, it happens to a lot.
You can call the brokerage companies and tell them to take you off margin, and
I don't touch margin no more, bro.
Yo, man, you
learn the hard way.
You don't have to be that way, man.
Yes, I learned the hard way. I don't touch margin. I don't do anything. If I don't have the money and that account to fund the trade, and most trades don't take a lot of money. Most option trades don't take a lot of capital unless you're trading bigger stocks like a Google or Amazon. Then to buy a contract there, it might take a couple thousand. But most companies, you can buy Apple and everything like that for dirt cheap. You don't need a lot of money to trade options. You just
but that keyword is discipline, right? So when I was trading,
discipline.
A couple trades I made, I gotta learn to take profits and run, right?
Yes.
I could be up 50%, and I'm like, I may be squeeze out 60.
So what I do when I get up 50%, what I do is I put a trailing stop on it. So if unless it just fall like out of the sky like a meteor, it'll hit my stop. You know what I mean? So what I do is when I get up big, I put a trailing stop on it.
But that still involves discipline, and that's my point.
It does.
And that's my point, and also knowing when to cut your losses too, right?
Yeah, I take half of my position off in that case. I take half of my position off, and if I have a good trade, I'll let the other half run.
And that still involves discipline. Though.
All of that involves discipline.
Yes. So, like the in and out play, like I said, that's a bread and butter trade for me, and that's automated. I set that trade and it's automated. When it hits 50%, 55%, it automatically cashes me out, and I'll let the trade sit there until 4 days out when it's ready to expire. That's the type of trade either you're going to win or you're going to lose. You're all in on it. There's no real need to have a stop loss on that type of trade because you're only risking whatever I would say if you do $1 contract, you're only risking $100 on that type of trade. So really, it's an all-in trade. Yeah, you could get out if you really needed to, but I already measured my risk.
How many of those do you do a day? So you saying you risking $100? How many of those do you do a day?
I wouldn't say I do them daily, Corey. I would probably say on a weekly basis, I might do 10 or 20 of them a week.
Okay.
So, and when I say 10 or 20 of them a week, I might position myself in an Apple trade, maybe 5 quantities of 5s, or I might only do 1. It's depending on how I decide to allocate my funds. And I put them all over. That's the type of trade that you could just put all over. And if it's going to move your way, it's going to move your way. If it's not, then you know what you got at risk. So you're not
going to be up or down $100 one way or the other. You're not going to be losing or winning a lot. Yeah. But if you win more than you lose, you'll make money.
So once you use that type of trade, it's called is on Thinkorswim. They have a thing called probability of touch. So even before I even put the trade on, I'm already about 58 to 60% within the probability of touching my money, meaning within the probability of making money on that trade. Then on top of it, I'm only aiming to get 50%, 55%. So that also put the probability. So I love having the probabilities on my side when I'm trading options.
You have to.
It gives me that edge I want. So once I have that edge, I don't mind putting my money at risk. So more like, let's say I give you an example. I just read my portfolio and my balance sheet, my balance statement last week. And for the month of August, I did a lot. For the month of August, because the market was a little volatile. I love volatile markets. I text Jim all the time when it's volatile.
Mm-hmm.
I probably did about 150 of those trades. Out of that 150, Corey, I probably hit on maybe 98 of them. I think it was, hold on, I got you right now. I'll tell you the exact number. I hit 93 on a profit of at least 40 to 50%. Although I keep track of most of my trades. So I made good money in August because the market was volatile. But some of them I lost. And I was fine with taking the L and going ahead. You're not going to win every trade. Mm-hmm. So that's just the way the game go. But
you had a high probability of winning every trade though. And so that's why you won 93 out of 150.
Yes. So a lot of those type of trades I will do. And by any means, there's no trading advice. There's a lot to go into that strategy. So I don't want people just thinking they could throw on that type of strategy and it's going to be fine. It's a lot that goes behind the scenes to a strategy. Like
you just told us all the work you do up front with reading 10Ks and doing probability and analysis. So you just told us you do a lot of work before you put these trades
put on the trade. Yes.
Yeah, he gave us a lot of work that go into it. He gave us a cheat code. I'm about to see if Google Home could start reading some 10Ks, man. I never thought about that.
Man. Yeah. So I know you own a lot of companies, Jim, but I would definitely.
Funny thing is, I really don't like. I think in terms of like individual companies, I'm probably down to about 10, right? So instead of taking a bunch of positions, I started building up the most amount of blue chips, building up heavy positions in those companies. Now I do got a handful of ETFs too, which gives me exposure to a lot of things.
Yes.
I fell in love with ETFs. The more I studied them, the more I fell in love with them. I was actually telling Corey yesterday that I had to reallocate my portfolio because like a lot of there's certain times I have like multiple companies within the same field. I'm like, if I just bought this ETF, it gives me those two as well as exposure to a couple other things. Yeah. And some of those ETFs, especially depends upon how they're weighted, work better. So I've actually fallen in love with ETFs over the last year or so.
I actually just bought a couple of ETFs, like the gold ETF, and like I said, these just not trading advice, but I just bought a few ETFs myself. Like once I seen the market start getting volatile and Trump start, popping off at the jibs, I start buying them gold ETFs because I know the market, going to take some dips, and so them gold ETFs start like that kind of information right there. You know what I mean? That's just
But one of the reasons like I consolidate a lot of my companies is because of that. Like I'm just like you. I want to hold these companies forever. So therefore, I want to read the 10Ks. I want to listen, the annual reports and all that. And you can't study 60, 70 companies. Like, you know what I mean? As an individual, you can't do that. And
that's where the brokerages make their money, because they got people that can do that for you. And that's why a lot of people trust their money to brokerages instead of doing it themselves. Yeah. But the thing that they don't understand is what me and you were talking about is them fees will eat up your profit.
Listen, man, and that's the thing.
Them fees will knock your profits out the box.
Absolutely. And that's one of the things where and people don't, I have a huge percentage of my net worth in the Vanguard 500. And that's not investment advice again. Yes. But I do. And the reason I do that is because, again, it's self-cleansing. And it gives me exposure to the top 500 companies. And I don't have to even worry about that. But then I have my 10 companies that I focus on heavily, my blue chip stocks that and the people watch the show, they probably even know what those 10 are because I talk about them from time to time. Yeah. You know what I'm saying? But the thing is, though, I gotta see if the cheat code works, though. I'm about to get off here, get on Siri, get on Google Home. I'm gonna say, who gonna read me these 10Ks? Because that's no one ever told me that before. That's definitely a cheat code.
Just like Siri, if you highlight something, if you got the feature on your phone, you set it up. If you highlight something, it'll read it off to you.
Yeah.
Same thing. All you do is go into the investment sites or whatever company you want to know. I download it as a book. Then I just highlight it and I just have it read it off to me. That's it.
That's a definite cheat code. That's a game right there. Damn, no one ever pulled that one out. That's a cheat code. That's definitely.
So in the morning, most of my morning rides to work, I'm trying to soak up knowledge about companies that I love. That's
dope. And you don't have to answer this question, but let me ask you: if out of all the companies you own, what is your favorite company? I like to ask people this to see what, like, because it could be based on the products they make. It could be based on the dividend.
Johnson is my favorite company. Out of all of them I own, I love Johnson the most.
Nice. And
you see them just get smacked over the head, right?
I love it.
And it don't even matter. And the disclaimer.
It don't matter.
The more lawsuits and everything, I love it because all it does is drive the stock price down. And for me to buy, I'm going to buy more. So I love averaging in on positions. So for most people, all right, averaging in is another form of how I invest. So if I want to buy into a company, A, B, C, D company, whatever, if the stock price, I love buying companies that's 20, 30% down. I love buying companies like that. I love buying the bad news companies and things of that nature. But I always average in my positions. And like you said, Corey, how I always take action. So sometimes for me to take the action, I would want to allocate just a round number, $5,000 to a company. I'm not going to buy, if the stock price is at 130, I know this company is going to take another hit, or I believe it's going to take another hit. I wouldn't just buy the $5,000 of that company. I will probably be honest with you. I will buy one share, just one, just to start me out with, just to get my feet wet and take the action. So it makes me feel good when I open up my portfolio and I just own the company. Yeah. So then I'll start averaging in. Then I'll deploy $2,000 worth. Then if the company drops another 3, 4, 5%, I'll deploy another $1,000 worth. So the more I average down, I'm averaging down on buying this. You got to think, as far as my dividend yield is going higher. My dividend, I'm going to start out with a higher dividend yield than most. So a lot of my positions, I love to average into companies. So
yeah, you gotta be careful with the averaging though, because what'll happen is if it average down too much, then you won't be making any. You'll be losing money on the position.
I'm fine with being down in my positions because, like I said, most of these companies I'm going to hold.
You're going to be holding for 50 years.
Yeah,
and you don't think over a 50-year time frame is going to be down.
And disclaimer, and I just want to say disclaimer. I'm a J&J holder too, because I actually used to work there for a quick minute and got some stock from back then. And actually, that's one of my favorite companies too. Because Corey, the thing about it was crazy about that is like, they get hit with big lawsuits all the time.
They do. They be getting mangled. But that like for a long-term investor, Johnson & Johnson's not going anywhere anytime soon. Exactly. So the lawsuits, like they get hit with 3 or 4 lawsuits a year. Exactly. So it doesn't matter that those lawsuits come. Those lawsuits is the time to actually average in and buy some. And buy some also for an options trader. Those are times where you can go ahead and make a couple dollars on the way down. And then if you hold more than 100, you can make on the swing back up.
Yep.
Yeah. So listen, like a million ways to make $1 million.
Man, the one thing that's evident through this episode, man, and I don't want to hold you in forever, man, but I just want to say first off that I appreciate you for giving us your time and all the game you've given us, because you gave us a lot of jewels and gems in this episode. Stuff I'm gonna take away with. I'm about to go play with my Google Home and Siri right now, trying to see how many 10Ks I can hear. But the one thing that's evident is you put a lot of thought into what you do, and you do a lot of studying. I could tell just from the conversation that you do a lot of studying. And that's something that people can also pick up on, is that if you actually want to get into this game, you should be, these are the conversations you should be having, and you should be doing your studying, man. So you figured out your formula with each piece, right? So your trifecta of options, dividend investing, and real estate, and you got your formula and it's working for you. And much continued success, good brother.
Thank you, Jim. I appreciate it.
Man, I can't believe the badass kid down the street with the long hair is a big boy investor these days, man. That's crazy.
I blame you. You should have took me under your wing a long time ago. I'd have been out the game for.
I hear you.
I appreciate it.
Listen, man. Yeah, absolutely. Absolutely, man. And for those out there listening, man, make sure that you share this episode. I'm going to put his IG links and everything in the description so you can get in touch with Spoon and see what he's got going on. Core, any questions before we get out of here, good brother?
No questions, man. I want to thank him because he always come out and support us, man.
That too, man. Absolutely. We definitely appreciate your support, man. And for those out there watching this, also make sure that you come check us out. The date is what, October 26th, Core?
Yeah, October 26th.
All right, so October 26th, here's the event that we're going to have. It has nothing to do with us. We're trying to see if we can get people to come together to support a black business. So we decided every once every 2 months, we're going to pull up on a black business, invite people out, just a network talk, and everybody come spend $20 with that black business. Because a lot of times we talk about supporting black business, and a lot of us sit online and type all day about what's going on, but we want to start actually taking action. So I'll put the information about that in the description box as well, and also follow us on IG or Twitter. We're going to put the flyer up. But we'll continue to bring these guests. So some of the guests that actually have been on our podcast will be in attendance at this event. Just a network and talk. We can talk options, talk stock, talk whatever, man. But once again, Spoon, man, listen, I appreciate you, good brother. And like I said, much continued success, man. And make sure you build up the portfolio for them babies, man, because it's all about generational wealth, right?
Generational, passing it down.
That's right.
Yep.
That's right. Listen, so for those that, as we always say, it's not about how much money you make. It's about how much you keep. Game elevates, man, and we'll see y'all next time. Peace.
All right. Thanks, Jim.